A $30 million asset valuation evaporating into less than $95,000 practically overnight isn't just a clerical error.
And Omar skipping a hearing used to examine her potential ties to a massive state fraud scheme and now facing pressure from Republicans. As Tom Homan signals, the feds may get involved.
The whole file is being reviewed. A lot of smart people are on it. Stay tuned.
Safety correspondent Mike Tobin has got the details. He's with us in Chicago. Hi, Mike.
And, John, the issue Minnesota Republicans have with her is that Congresswoman Ilhan Omar is not facing the questions, not to reporters, not to the Minnesota House Committee on Fraud Prevention. You've got the issue of her family estate. Disclosures show she and her husband, Tim Mynett, went from debt to anywhere between $6 and $30 million in 2024. A few weeks ago, a new disclosure was filed stating their combined assets were between $18,000 and $95,000. Her office blamed the discrepancy, as much as $29 million, on an accountant who failed to subtract the liabilities of Mynett's businesses.
It is a forensic black hole that suggests the internal controls of Representative Ilhan Omar's financial disclosures have reached a state of total structural collapse. We are witnessing a systemic liquidation of perceived wealth that coincidentally aligns with a high-intensity audit from the House Oversight Committee, leaving the American taxpayer to wonder if the primary source documents of the Mynett Omar household were ever actually reconciled with reality. When the managing director of a district, the Congresswoman, claims a 99.7% accounting error only after the federal auditors, the GOP, start issuing subpoenas for the inventory of influence, you aren't just looking at a bad year on the ledger. You are looking at a reputational default where the liabilities have finally been unredacted. The sudden shutdown of eStCru wines on April 4th is the visual confirmation of a distressed asset being taken off the market before the forensic investigation can certify the source of its surging value. We are documenting the moment where the bat signal of oversight met the operational failure of a politically connected special purpose vehicle, proving that in the world of forensic verification, you cannot write off $30 million of ghost equity without the auditors noticing the material gap in the reporting.
Then you have the Feeding Our Future scandal. Omar championed the Meals Act, which Republicans say removed the guardrails. Meals were billed to taxpayers but never delivered, to the tune of $250 million. A player at the center of the scandal is a partner in what was the Safari restaurant. Omar held campaign and promotion events there. The Minnesota House Committee wants to ask questions on both subjects, but Omar does not respond.
It's just another example of disrespecting Minnesotans. She thinks she can get away with things like this because she's, a powerful politician, but Minnesotans are fed up. Minnesotans in her district are fed up. They really care about how their money is spent.
Robbins sent another letter to Omar's office requesting disclosures about communications with and donations from people convicting in the Feeding Our Futures program. Reporters have tracked her down, and they never get an answer. My team has reached out to Omar's office. Also no answer. The only communication we've got is that statement from her office blaming the $29 million discrepancy on the accountant.
I am Camilo Motato, and this is Camilo's House. As a certified public accountant focused on forensic verification, I approach a financial disclosure like a mandatory filing, where the footnotes tell the real story of asset impairment. In a standard audit, if a partner, Tim Mynett, reports an asset growth from $51,000 to $30 million in a single year, and then amends the ledger to $95,000 after a subpoena is issued, you don't just accept the new figures. You perform a deep dive forensic reconstruction of the inflow of capital. Today, we are performing a financial disclosure solvency audit on the Omar Mynett portfolio. We are analyzing the materiality of the eStCru winery shutdown, the forensic discrepancy between $30 million and $95,000, and the regulatory risk of unknown investors seeking a preferential rate of influence through a sitting congresswoman. This is the Omar asset devaluation audit, and the accountability trail is leading directly to the liquidation of her husband's business interests. The operational trigger for this latest fallout is the abrupt shutdown of eStCru Wines, a California-based winery partially owned by Tim Mynett. According to California business records extracted by the Washington Free Beacon, the winery liquidated its operations as of April 4, 2026. From an investigative standpoint, the timing of the liquidation is a critical red flag. In auditing, when an entity shuts down in the middle of an active probe by the House Oversight Committee, It suggests a strategic default intended to redact the operational records before they can be verified. Tim Mynett started eStCru in 2021, and by 2025, Omar's disclosures listed his stake as worth between $1 million and $5 million. To go from a $50,000 valuation in 2023 to a $5 million valuation in 2025 is an exponential growth rate that rarely occurs in the wine market without a significant capital injection. House Oversight Chair James Comer has certified the systemic risk of this growth. In a February letter to Mynett, Comer flagged that the combined value of eStCru LLC and Roselake Capital LLC allegedly surged from $51,000 to as much as $30 million in the 2024 reporting period. As a CPA, I track the source of inflow. If these special purpose vehicles do not publicly list their investors, they become dark pools for potential influence peddling. Comer's audit opinion is that unknown individuals may be investing to gain influence with Representative Omar. The bat signal of $30 million in unexplained equity has permanently impaired the ethical portfolio of the Congresswoman, especially as she hedges her defense by blaming a clerical accounting error. The management response from the Omar campaign is a masterclass in forensic damage control. Her spokesperson told the Minnesota Star-Tribune that the original filing was based on incomplete information and that it significantly overstated her husband's net worth. They claim the accountants listed assets without liabilities, creating a misleading picture of wealth. In forensic accounting, we call this a material misstatement of equity. To misplace $29.9 million in liabilities is not a minor accounting oversight. It is a structural failure of financial reporting. If the accountants were operating in good faith, they would have performed a basic reconciliation before certifying a $30 million net worth. By amending the disclosure to show a net value of between $18,004 and $95,000, Omar is writing down 99.7% of her husband's reported assets. This devaluation is intended to redact the millionaire label from her brand before the November election, but it increases the liability of her transparency record. We must also audit the operating history of Roselake Capital LLC, the Washington, D.C.-based venture capital firm Mynett co-founded in 2022. Venture capital is a high-risk, high-reward asset class that often involves confidential stakeholders. If a related party to a legislative manager, the husband of a congresswoman, is managing capital for unknown entities, the potential for fraud is material. Comer has requested discovery on all communications related to this firm to see if the asset surge was verified income or synthetic equity used to launder influence. The shutdown of eStCru suggests that the Mynett portfolio is currently in a state of forced liquidation, as the regulatory pressure of the GOP audit makes it impossible to maintain operations without full disclosure. The political surcharge on this audit is significant. RNC spokeswoman Delaney Bomar has disclosed that voters see right through what she calls corrupt lies. From a human capital perspective, Omar is amortizing her credibility every time she amends her ledger. You cannot audit the billionaires and demand transparency from the market while your own family balance sheet is a moving target of ghost millions. The Comer probe is a mandatory compliance review of a legislative professional who has repeatedly defaulted on her reporting obligations. Whether it was the 2020 ballot seizure in her district or the $30 million error in her home, the pattern of reporting deficits is systemic. The forensic math of the amended disclosure is perhaps the most absurd disclosure of the 2026 cycle. Original asset value, high end, $30 million. Amended asset value, high end, $95,000. Net difference, $29,905,000. Variance percentage, 99.68%. In any professional audit, a 99.68% variance is considered a total systemic default. It means the original reporting was completely insolvent and non-compliant with generally accepted accounting principles, GAAP. Omar's communications director, Jacqueline Rogers, told the Wall Street Journal that the amended disclosure confirms she is not a millionaire. But as an auditor, I ask, where did the $30 million come from in the first place? Accountants do not accidentally invent $30 million in ghost equity. They report what is verified in the client's ledger. The bat signal of $30 million suggests that there was an intention to report wealth until the oversight audit made that wealth a legal liability. The geopolitical stress on the Minnesota fraud probe continues to widen as Comer warns that the walls are caving in on the state's leadership, including Governor Tim Walz. The Feeding Our Future scandal, which we have extensively audited on this channel, is the background environment for Omar's personal financial meltdown. If the state management is defaulting on its fiduciary duty to the tune of $9 billion in fraud, it is materially probable that the local representatives have also impaired their integrity. The vinegar attacker who rushed the stage in St. Paul is a negative indicator of the social equity currently surrounding Omar's brand. She is facing the consequences of a portfolio of scandals that include immigration fraud accusations and financial inconsistencies. The final reconciliation of the Ilhan Omar husband audit reveals an administration in total operational arrears. You have a winery that has liquidated to avoid scrutiny, a venture capital firm with undisclosed stakeholders, and a congresswoman whose financial statement has a $30 million variance. This is not a clerical error. It is an institutional fraud on the public ledger. The House Oversight Committee is currently the only auditor providing forensic oversight of this material mismanagement. Until the primary source documents of Tim Mynett's asset surge are unredacted and verified, the Omar brand remains reputationally insolvent. My forensic verdict is that the April 4th winery shutdown is a strategic liquidation intended to preempt the subpoena. Fani Willis and Ilhan Omar are operating from the same playbook. They fight the audit for years, then amend the ledger when the truth is about to surface. The $30 million accounting error is a total breach of fiduciary trust. If a member of Congress cannot manage their own home's balance sheet to within 99% accuracy, they cannot manage the appropriations of the American people. I want to hear from you. Is a 99.68% valuation variance a simple accounting mistake? Or is it the forensic signature of hidden assets being liquidated to avoid an audit? Should Tim Mynett's investors be unredacted and publicly disclosed to ensure there is no influence arbitrage? Let me know in the comments. Your perspective is the only audit that matters when the integrity of the board and the safety of your taxes are sitting on the negotiation table. I am Camilo Motato, and this is Camilo's House. Subscribe to stay informed on the numbers, the laws, and the truth behind the headlines. Stay safe.